My top 4 dividend stocks in the materials sector. Let's begin. So starting things off, we got Celanese Corporation, and Celanese Corp is a chemical company that produces materials and chemical substances. Now, one quick point that I like about Celanese Corporation is that 95% of the products that they make are market leaders. They rank either number 1 or number 2 in their respected categories. Now, before we start, a quick thing that I want to mention with these chemical companies and these companies in the materials sector, they are pretty hard to understand, and some of the products that they make are really complex, especially if you don't know chemistry like I don't. But the end use or the end application where these products are used in is pretty easy to understand, and it's in everyday products that we use every day. So that does give me a little bit of confidence when investing in these companies. Now, I don't have much invested in the materials sector, but I do have a small portion of my portfolio in it. So back to Celanese Corporation, they have 3 business segments. The first business segment is the engineered materials segment. Now again, the products that they make, I honestly don't understand any of them, but we can understand the end use applications of these products. Now, these products are used in the automotive industry as mechanical parts. One of the major parts, which would be power windows that we use every day to power the windows of our cars. They're also found in consumer electronics, in the batteries that we have in our smartphones and in different electronic devices. And they make some of the food ingredients that we consume every day, for example, potassium. Their next business segment, we have the acetate tow, and this is basically used in filtration, and one of the major products that uses acetate tow is cigarette filters. And their last business segment is acetyl chain, and acetyl chain basically is the chemistry behind what goes into paints, coating, adhesives, and pretty much all those products that we use in our everyday lives. Now, as far as these 3 business segments for Celanese, they are pretty well rounded, with engineering materials and acetyl chain generating about 90% of their sales. Now, when it comes to dividends, they have been paying and growing their dividends for 11 consecutive years, but I do want to note that for the past 6 quarters, they have been paying 62 cents per share, and they're probably going to pay 62 cents again in the 4th quarter of 2020. And even if they do pay 62 cents again, it would still be considered a year-over-year growth when it comes to 2019 dividends versus 2020, but I do want to see that dividend increase in the 1st quarter of 2021. But as it is right now, they are paying $2.48 per share, and with a price of around $100, they do have a dividend yield of almost 2.5%, which is higher than their 4-year dividend yield average. Now, when it comes to earnings, we do have the forecasted upcoming 4 quarters for Celanese, and as you can see, the next 3 quarters are going to be really rough on this company. We have 34%, 17%, and 15% year-over-year slowdown for the next 3 quarters, but demand is projected to pick back up in the 2nd quarter of 2021, and hopefully Celanese can get back to more consistent profits by then. But anyways, they are projected to do $7.50 over the next 4 quarters, and with their current payout of $2.48, that gives them a payout ratio of 33%, which is very healthy, and that's why I do think they could end up raising that dividend in a few quarters. However, they don't have to, and if they don't, I would understand, since they are in a tough market right now. Now, as far as valuation, they do have a 5-year average PE of about 17, and I think buying this stock under 15, maybe at a 14 to 15 PE, it would be a good deal. And as of right now, it's actually trading at that valuation, if not even better. It's trading below a 14 forward PE, and I do think Celanese does offer a good value and a good dividend moving forward. I do own a few shares of this stock in my portfolio, and I do want to continue to add to Celanese Corp over the next few months, especially if I can get it in the low 100s. Now, as far as their EPS growth for the next 5 years, Celanese is projected to grow under 2% for the next 5 years, but keep in mind that this is mostly due to the fact that they are in a tough market situation right now. It's going to take a while before they can get back to the pre-pandemic numbers. Now, coming up next, we got Eastman Chemicals, which is another chemical company that also does basic materials as well. They're very similar to Celanese Corp. They're just a bit bigger of a business, at least in terms of revenues. Now, as far as their segments goes, they have 4 reporting segments, and we can kind of compare it to Celanese Corporation. Their first 2 business segments, additives and functional products, and advanced materials, we can compare that to the engineered materials of Celanese Corporation. And then next we have the chemical and the fiber segments. And the fiber segment of Eastman Chemicals includes the acetate and acetyl chain, kind of similar to Celanese Corporation. Now, Eastman Chemicals is a bit of a bigger company again in terms of revenues, and their business segments are pretty well rounded, just like Celanese. Now, as far as dividends, they have been paying and growing their dividends for 10 consecutive years, and right now they're currently paying $2.64 per share, and with the share price at the low 70s, you do get a 3.5% yield, which is definitely higher than their 4-year dividend yield average. Now, when it comes to their forecasted 4 quarters, their next 3 quarters, just like Celanese, is going to be down year over year, and they are projected to pick their business back up in the second quarter of 2021. But they are projected to do $6.21 for the next 4 quarters, and with their payout at $2.64, that gives them a healthy payout ratio as well of 43%. Now, as far as valuation, they do have a 5-year average price to earnings ratio of about 12, and picking up this stock under a 12 forward PE, I think is a good deal. And as of right now, the stock is trading at around $73, $74, which is a pretty good price point to enter in Eastman Chemicals. I don't think it's the best discount possible, but it is a good starting price. And I do have a few shares of Eastman Chemicals. Again, this is a sector that I don't have much as far as my portfolio dedicated to materials, but I do like this company, and I kind of like it for the consistency in the business and as well as their dividends. Now, as far as growth, they are projected to grow at around 2.78% for the next 5 years per year for their earnings per share. And it's kind of funny because when I invested in Eastman Chemicals, I kind of invested in them for their valuation, more as a value play, and for their strong dividend. And Celanese was the one for their more growth and higher dividend growth potential. But right now, it kind of feels like the roles are reversed. But that's pretty much because Celanese is getting hurt by this pandemic situation, and since they're not as big as Eastman Chemicals, they are seeing a little bit of a tougher hit. But I do think, again, after a few years, Eastman Chemicals and both Celanese will do just fine. Moving on, we got Air Products and Chemicals, and this is a Dividend Hall of Famer. I'm sure most dividend investors are aware of this company, and we'll get to that in a second. But as far as their business model, Air Products and Chemicals specializes in industrial gases, pretty much supplying oxygen, nitrogen, and other rare gases. And as of right now, with the current market conditions, oxygen is in pretty high demand, which is pretty good for the business. Obviously, it's not something you would want for the general public, but they are somewhat benefiting from the demand in oxygen in hospitals due to the whole pandemic situation. Now, as far as for Air Products and Chemicals, I wanted to bring out quickly their 10-year revenues and net income, and just wanted to show the fact that they have a consistent business model. And yes, the trend line is a little bit down, especially if you look back as of 2014, but in the grand scheme of things, it is pretty consistent, and so is their earnings, and that's what a dividend investor likes to see in a dividend stock. And speaking of dividends, they have been paying and growing their dividends for 31 consecutive years, making them a member of the Dividend Aristocrats, another reason why a lot of dividend investors like this stock. Now, as far as their dividend right now, they are paying $5.36 per share, and with the share price at almost 300, which we'll get to that in a second, you do have a current dividend yield of under 2%, which is significantly lower than their 4-year dividend yield average. Now, when it comes to the forecasted 4 quarters, as you can see, they are projected to do fairly well for Air Products and Chemicals, again with the demand for industrial gases being a little bit higher than it would normally be. They are projected to do fairly well. Now, they are projected to do $9.40 for the next 4 quarters, and with their payout at $5.36, they do have a relatively high payout ratio at almost 60%, which does cause a little bit of concern, at least in my opinion. But then again, if you look at the track record of Air Products and Chemicals, you kind of feel a little bit better knowing that they have 31 years of consecutive dividend payment increases. Now, as far as valuation, this company does have a pretty rich premium when it comes to buying the stock, with a 5-year average PE of 27. And I think if you are going to buy the stock, try to pick it up at around a 24-25 PE. That gives you a pretty good discount, and it lowers that price to earnings at least under 25. Now, as far as this company in my portfolio, I don't own any shares, and I probably don't plan on buying any shares neither. Not just because the valuation is really high right now, but also, again, like I said in the beginning, I really don't have that much money invested in the material sector, or at least not that much money that I want allocated towards this sector. But I do think this is a good company, a good stock, a very good track record when it comes to their dividend, even though they do have a high payout ratio right now. Now, as far as their growth rate for their earnings per share, they do have a double-digit growth rate for the next 10 years. I'm not sure how much the whole pandemic situation is playing a role on this growth rate, but it is a high growth rate, and it kind of grants them that high price to earnings valuation. Now, lastly on the list, we have Linde PLC, and Linde PLC is another industrial gases company. That's what they focus on. Again, oxygen, nitrogen, and other rare gases. Now, looking at Linde's 10 years of revenues and net income, and when we compare them to Air Products and Chemicals, we can see that they're both very consistent businesses, which is the point that I was trying to make with Air Products and Chemicals. Now, you do see this huge spike in 2019 for their revenues, but that's only because in October 2018, they went ahead and they merged with the US company Praxair, and then they went ahead and formed Linde PLC. Now, as far as their dividends, they've only been paying their dividend for 1 year, and I believe they did ended up growing it. But keep in mind, this stock was only just made available to US investors in November 2018, so they don't really have a track record in the US stock exchange. But I do think this company is just going to continue to pay and grow their dividend into the future. Moving on to their earnings, they are projected to do really well for the next 4 quarters. Kind of like Air Products and Chemicals, they do have a pickup in demand for the next 4 quarters, and they are projected to do $8.28 for those 4 quarters. And their current payout right now is $3.85 per share, and that does give them a healthier payout ratio at 46%. Now, as far as valuation, they do also have a pretty rich valuation at 28 for their 5-year average price to earnings. And I think the same thing with Air Products and Chemicals. If you can get this stock at a 24-25 PE, I think that would be a pretty good deal. But the stock right now is trading at around 253. But if we take a look at the growth rate, just like Air Products and Chemicals, they do have a double-digit growth rate for the next 5 years per year for their earnings per share. But that's pretty much it. Those were my top 4 dividend stocks in the material sector. We had Celanese, Eastman Chemical, Air Products and Chemicals, and Linde Corporation. Hopefully the video was helpful, and thank you so much for watching.